We often talk with clients about the importance of why they should roll over their 401k when they're no longer working there. Watch this video and find out why we put such an emphasis with our clients and the reasons why they should roll over their 401k to take advantage of maybe some other opportunities. So watch this video and find out the 3 reasons why you might want to roll over your 401k. Hey everyone, Logan Sadler. Thank you for stopping by the Financial Beat YouTube channel. As always, the sole purpose of this channel is to really just bring some continued value and some education to you guys out there on retirement planning topics. As a financial advisor, this topic is one I cover a lot with prospective clients and existing clients on what we should do with that old 401k. A lot of you guys might have heard maybe we should roll that over or do different things with it. So really reason number one is investment options. Some of you guys might have signed up for this 401k maybe 10 years ago, 20 years ago, maybe even 30 years ago, and you haven't really changed those investment holdings. It might be in the same 3 or 4 funds that you picked when you originally signed up. And a lot of the times you might have picked those funds because your friend at work said that that's what he's in or that's what she's in, or you really didn't have a lot of reasoning behind that. The other reason is as well, you have a lot of your investment options look something like this, meaning you probably have 15 to 20 different funds to pick from if you're lucky, and that's about it, right? Reason that you can move your 401k over to an IRA is the investment options now are endless. You look at, once you make that rollover into the IRA, you now have thousands of different funds, stocks, ETFs to choose from, as well as you have a whole nother side of the business looking at fixed products like annuities, life insurance products, structured notes. I mean, there's a whole world out there outside the 401k that you just don't have access to currently in the 401k. So it's a big opportunity once you're no longer working there to roll that out into an IRA and take advantage of some of the other investments out there. Really the biggest purpose of rolling that out is you're able to get a lot more customized on what investments you might want to be invested in and how you really want these assets to impact your retirement savings. So again, that's one of the biggest reasons I always tell people is just because the value out there in all these different asset classes, like maybe annuities make sense, maybe fixed annuities make sense, structured notes, ETFs, mutual funds, stocks. Like I said, there's all these different ways to go. Finding the right approach for you is probably different for everybody, but just knowing that outside the 401k, you have a whole world of investment options, again, to really potentially maximize that retirement savings, that retirement dollar into retirement. Number 2 is being able to work with an advisor. I always tell people there's a lot of people out there that might be pretty confident in managing their investments themselves, but there's a majority of the people out there that aren't confident in doing that or know that they probably could get a better job done by working with an advisor. When you roll that money out into a IRA, then you have access to a lot of independent advisors out there. I tell people this same message, even if you're not going to go with us. I always say it's so important when you do that 401k rollover to find an advisor that specializes in that area of life that you're in, whether it's pre-retirement, retirement, the growth phase, accumulation phase, whatever phase you're in. Make sure you find an advisor that specializes in what time you're in. And the advisor, really what they should be able to do is bring loads of value, not just in buying or selling your investments, but actually in planning. When you are able to work with an advisor that's able to look at how much more do we need to put away to get to where we need to be in retirement? What's our cash flow in retirement going to look like? Are we on track with our current budget, right? I mean, looking at all those things, then the more advanced stuff like tax planning. There's a lot of people that don't know. Most people put away in a traditional 401k and don't know that there is a tax train coming down the road, meaning you're putting away a bunch of tax deferred money. So you want to make sure you're working with an advisor that can really kind of lay the groundwork, as well as to really help establish realistic expectations and risk for your portfolio. To me, those are 2 of the biggest things that an advisor could do real simply for a lot of people is help provide realistic expectations and understand the risk of your current investments and what the implications might be moving forward with those investments. That helps kind of lay the groundwork. So that's number 2. Number 3 is fees and cost. A lot of people say, well, my 401k is not charging anything. I don't ever write a check or whatnot. Well, a lot of people don't know there can be a lot of fees, I should say, in 401ks, depending on how it's set up, what type of 401k structure, how big or small that plan is, can really have an effect on it. But basically, I mean, this is according to Investopedia. Basically, they could run from anywhere from 1/5% up to 2% per year cost. So you look at that, you're going to fall somewhere in that spectrum. So a lot of the times we don't understand that we're paying out money and fees that might be impacting that portfolio, and we might not be getting that level of service, or not even have an advisor, or not really know what we're utilizing in that 401k. So I think a lot of times moving the 401k, sometimes you could save money, as well as you have the advantage to working with an advisor and having all those other ones I mentioned, the advisor, and having more investment options that customize retirement plans. So those are three of the main points to doing so. The other one is when you do a 401k rollover, you want to make sure you're working with a professional and make sure you know how to do this right. You want to do a direct rollover. What that means is basically, let's say your 401k is with Fidelity. I'm not picking on Fidelity. I just know they're one of the biggest providers out there. So odds are, if you're watching this and have a 401k, odds are it might be a Fidelity account. Let's say you've been with Fidelity for maybe 15 years or so, and you now are no longer at that job, and you wanted to do a rollover. Maybe you wanted to manage it yourself, or maybe you wanted to work with an advisor. Let's say the other company is TD Ameritrade or Charles Schwab, one of these other companies. Essentially how it would work is you do a direct rollover. You contact the custodian. It goes from custodian A to custodian B. Direct transfer. You don't ever take the money. You don't ever have to cash a check, none of that stuff. You want to make sure you're doing it directly. If you do it directly, there's actually no tax implications. You can do a direct rollover from company A to company B. That is the easiest way to do the IRA or 401k to IRA rollover, as well as there's some other rules that we could dive into on other videos, but you want to make sure you're working with somebody that knows how to do that correctly, and make sure, again, that we're maximizing that money and not having to pay out any taxes or any fees that we could have probably avoided, okay? The other reason I really like to talk about 401ks is a lot of people don't know that essentially if you are still employed by that company, but you are over the age of 59 and a half, that is the key number. If you're over the age of 59 and a half and still working for that employer, most of the 401ks out there allow you to do a 401k partial rollover, meaning if you have, let's say, $100,000 in there and you wanted to roll out $75,000 to work with an advisor or manage it yourself, have these investment options, everything we talked about, you can then do so over the age of 59 and a half. A lot of times that does make sense for clients because, again, that's kind of like that stage where, hey, look, we're getting close. I might retire at 61, 65, whatever age it is. So we really want to get more purposeful with our investments. Okay, so making sure 59 and a half, if those of you who are watching this video are over the age of 59 and a half, have a 401k, you really want to start looking around at what your options are and maybe working with somebody that can kind of get more customized for where you're going over the next few years heading to retirement. The next thing I wanted to talk about is what are some of the advantages? I'll tell you a story from my side working with clients. I have a client, she's 60 years old, so she's right over 59 and a half. She's 60 years old. She had around $1 million put away in her 401k, and she was getting ready to retire in about 2 or 3 years, so it was getting real close. She had came over to us from a family friend of hers that's currently a client, and she said, listen, Logan, I got $1 million in there. I'm not really fond of the market, so that's why, I don't know what to do with it. I'm really worried about if the market crashes and I'm about to approach retirement. What should I do, right? This is just one of these client expectations we were kind of going through. Basically, what I was able to kind of talk to her about is she had about 50% of her money currently in bonds. She said, I go to bonds because I know that they're not as aggressive as stocks, but I've noticed that over the last few years, my bonds have been significantly losing money, right? And I said, well, yeah, you're right, because you're in a target date fund that has about 50% of your assets are in bonds, and each of those bonds that you're in haven't been performing well. And now the market was down at this particular time. And now how that worked is both of her assets were kind of dragging her portfolio. So she said, I was asking your opinion if I should just go to cash, right? And I said, listen, we're getting really, really close to retirement. So I understand the need to want to be conservative, but now still is not a time to pull out of the market or to not make any money. So we were able to do a rollover to an IRA, get a real risk tolerance that she was comfortable, use 2 or 3 other bond alternatives that we use with our clients out there between fixed annuities, structured notes, and some of the other bond alternatives I've talked about on the show before to create her a customized solution for that 50% of her money that was in bonds that she wasn't that comfortable with, as well as we were able to further diversify her money that she did have in the traditional stock market to make sure she had a more balanced plan. And a lot more of that was a lot more purposeful for the next 2 years before she retired to start generating income and to really kind of reduce risk. But actually, in some instances, not all the time, sometimes you're able to actually reduce risk while potentially increasing return, because a lot of asset classes that people have in there, they're not really sure what they're doing or what other relative asset classes can perform up to that standard with that risk level. So that's just a quick story for you guys about why you might want to talk with other advisors or talk with us about what the potential to roll over the 401k is, if it's a fit for you, or if you get any benefit out of it. That's a great conversation to have with a qualified advisor. Again, those are just 3 of the common things I wanted to talk about with 401k rollovers, a hot topic. You'll probably see me do more videos on this here throughout the coming weeks on 401k rollovers, because it's such a big topic, as well as taking a little bit of a deeper dive into traditional 401ks. So again, always appreciate you guys stopping by. I hope you guys found this informational. And if you haven't yet, go ahead and click subscribe, and we will see you guys next week on The Financial Beat. Thanks.